Welcome to Finance Sensibility. Today we're diving into a topic that everyone needs to understand: the importance of having an emergency fund. Whether you're living in the USA, UK, or Canada, life throws unexpected challenges at us all. But with an emergency fund in place, you'll have a financial cushion that helps you navigate those tough times without falling into debt or financial stress. What is an emergency fund? Before we get into the details, let's start with the basics. What is an emergency fund? An emergency fund is simply money set aside for unexpected expenses, whether it's a sudden job loss, a medical emergency, or urgent home repairs. Think of it as a financial safety net that gives you peace of mind when life takes an unexpected turn. Why is an emergency fund important? Financial stability. Having an emergency fund can stop small problems from becoming financial disasters. If your car breaks down, for example, or your washing machine stops working, you won't need to rely on credit cards or loans to fix it. Avoiding debt. Many people fall into debt because they aren't prepared for unexpected expenses. Without an emergency fund, you might have to turn to credit cards or loans with high interest rates, which can spiral into bigger financial problems. Peace of mind. Life can be unpredictable, but having money set aside for emergencies helps reduce financial anxiety. You can sleep better knowing you're prepared for life's surprises. How much should you save? Now let's answer one of the most common questions. How much should you save in an emergency fund? Here's a simple step-by-step guide. Start small. Aim for a basic emergency fund of $500 to $1,000 to cover minor unexpected expenses like car repairs or emergency trips. Build to 3 to 6 months of expenses. Once you've saved that initial amount, aim to build your fund to cover 3 to 6 months of living expenses. This means saving enough to cover your rent or mortgage, utilities, groceries, transportation, and any other essential expenses. Tailor to your situation. If you live in the USA and have access to credit, 3 months of expenses may be enough. In the UK, where social safety nets like the NHS exist, you might not need as much for medical emergencies, but should still aim for 3 to 6 months of living costs. In Canada, balancing between healthcare access and other living costs is key. So again, aim for at least 3 months of expenses saved. Where to keep your emergency fund? You might be wondering, where should I keep this emergency fund? Savings account. The best place for an emergency fund is a high-interest savings account. This ensures your money is safe and easily accessible when you need it. Avoid risky investments. While investing is a great way to grow your wealth, an emergency fund should never be invested in the stock market. It needs to be easily accessible, not tied up in investments that could lose value when the market drops. How to build an emergency fund step by step. Now let's walk through how to build your emergency fund step by step. Set a goal. Decide how much you want to save, starting with $1,000 and eventually aiming for 3 to 6 months of living expenses. Automate your savings. One of the easiest ways to build your fund is to set up an automatic transfer to your savings account. Every month, have a portion of your paycheck sent directly to your emergency fund. Start with a small amount, like 5% of your income, and gradually increase it. Cut back on non-essentials. Look at your current spending habits and identify areas where you can cut back. Maybe it's fewer restaurant meals or cutting back on subscription services. Redirect that money toward your emergency fund. Earn extra income. Consider taking on a side hustle or freelance work to boost your savings. Every extra dollar you earn can go straight into your emergency fund. Use windfalls wisely. If you receive a bonus at work, a tax refund, or any unexpected money, put a portion of it directly into your emergency fund. Here is some real facts about emergency funds. Here are some real facts to highlight the importance of having an emergency fund. In the USA, nearly 40% of Americans can't cover an unexpected $400 expense without borrowing or selling something, according to the Federal Reserve. In the UK, over 9 million adults have little or no savings, according to the Money Advice Service. In Canada, about 26% of Canadians say they wouldn't be able to cover an unexpected $2,000 expense, according to a poll by the Angus Reid Institute. These statistics emphasize how crucial it is to have an emergency fund to prevent financial hardship. Common mistakes to avoid. Dipping into your fund for non-essentials. Your emergency fund is only for true emergencies, not for vacations or shopping sprees. Neglecting to replenish the fund. If you ever need to use your emergency fund, be sure to start building it back up again as soon as possible. For anyone wanting to dive deeper into the importance of financial preparedness and emergency funds, I highly recommend the book, The Financial Diet: A Total Beginner's Guide to Getting Good with Money by Chelsea Fagan. This book offers practical advice on how to manage your money wisely, including tips on saving for emergencies, budgeting, and making smart financial choices. An emergency fund is one of the most important financial tools you can have. Whether you live in the USA, UK, or Canada, being financially prepared for life's unexpected moments can give you peace of mind and help you avoid the trap of debt. Start building your emergency fund today, even if it's just $20 at a time. It'll be worth it when you face an unexpected expense without stress. Thank you for watching Finance Sensibility. If you found this video helpful, don't forget to like, share, and subscribe for more tips on personal finance. What are your tips for building an emergency fund? Let us know in the comments below. And don't forget to check out the book, The Financial Diet, for more insights into managing your money like a pro.